Sure, everybody likes big, solid dividends.
I have a plan.
It's the main reason why many investors pursue real estate investment trusts.
You've got a plan.
But a sizable payout and solid cash flow aren't enough to make a REIT a sure thing.
I have part of a plan.
And it can be hard to make astute choices while adding real estate to your portfolio.
I have an idea.
Brad Thomas, editor of the Forbes Real Estate Investor, looks at all real estate investment trusts to separate the smart picks from the fool's gold.
What one man can do, another can do. Say it again. What one man can do, another can do. Say it again.
Each week here on Money Life, Brad brings you one choice to consider for your portfolio, looking at its pros and cons.
Whoa, now slow down.
So that you can make well-informed choices in managing real estate within your investment portfolio.
What one man can do, another can do.
So put your thinking cap on. It's the Intelligent REIT of the Week.
Yeah.
Right now.
That's right. It is the Intelligent REIT of the Week, our latest feature here on Money Life. And we are joined today, as we will be every week going forward, by Brad Thomas. He is editor of the Forbes Real Estate Investor, just like that intro said. And each week we're going to be talking about real estate investment trusts. We're going to bring you one idea that Brad has. Now, it may not always be a buy, but it is the Intelligent REIT of the Week. We're certainly going to look more on the buy side than the selling side. But if you want to learn more about how it works, well, iREITinvestor.com. On Twitter at @Swan_investor. Do what you need to do to find out about how Brad is thinking. And over time, just as with the other regulars here on Money Life, you will learn a lot about not only how Brad finds REITs and which ones he thinks you should buy, but also the thinking that goes behind putting together a real estate investment trust portfolio. Brad Thomas, welcome to Money Life.
Hey, it's great to be on the show again, Chuck.
Let's get things started. Our REIT of the week is
Realty Income.
Realty Income. That's ticker symbol O. And let's get into it. Why Realty Income now?
Well, Chuck, interesting. I just wrote an article on Forbes about why the confusion REITs aren't bonds. And this is a prototype case of a real estate security that looks like a bond. This company has all the attributes of a bond, but it's not a bond. But what we found is over the last 30 days, the market has been responding to this company like it's a bond.
You would think that would make it an interesting opportunity right now, but it wouldn't necessarily make it jump off the page to me. Why does it make it jump off the page to you?
Sure. Over the last 30 days or so, Chuck, this particular stock, Realty Income, is down almost 9%. Compare that to the S&P, which is up about 2.4%. Over the last 3 months, Realty Income's down about 13%, while the S&P is up about 5 or 6%. So you can see that over the last 90 days, this stock is sold off harder than most of the REITs. Now, a lot of the REITs have sold off, but this company sold off the hardest. And the reason is because the market behavior, what the market believes, is that this company is really a risk-free fixed income instrument, and it's really not. And I'll tell you why. They just reported earnings last week, and their adjusted funds from operations, that's the profit as we describe in the REIT world, is up 4.7%. So this company is not a bond. They own a large portfolio of over 4,400 properties. That's 4,400 lease contracts that have rental increases. So again, as the rent goes up, so do the dividends. So this is one example of why this company is not a bond. Another example of this is the balance sheet of this company. Because of the balance sheet, the dividend is very, very predictable. The earnings are very, very predictable. When you look inside the balance sheet today, and again, I just looked over the first quarter earnings, and we can see that the company's trading at a very low multiple, but its debt is trading at below the peer group. It has relatively little secured debt, around 15% secured debt today. So this is one reason I like this stock. It's a very predictable income stream, but it's not a bond.
Beyond the income stream, what kind of upside does it have so that somebody's looking to be a total return investor and not just follow the income? You know, what's a reasonable forecast over what kind of period of time, and what's going to be the catalyst?
Sure. Well, there's two valuation metrics that I would look for here, and then we're looking for a margin of safety here. This is a buy and hold stock. It's a stock that I own, and I want to own it for a long period of time. But the two things I like looking for, number one is the earnings multiple, which we call the price to funds from operation, or PFFO multiple. Today, the security is trading at about 17.3 times. It's not a bargain of such, but it's what I would consider to be soundly valued. Again, shares have pulled back around 9% over the last 30 days. Shares are trading in the 47 range. So I think that company is very soundly valued today. Now, when I look at the other metric, which is the dividend yield, we can see that Realty Income's dividend yield is now around 4.8%. That's not a bad dividend today, especially when you consider the fact that this company has increased dividends for over 20 years in a row. Earlier this year, they got named in the Dividend Aristocrat Club, which means they now have over 20 years of increased dividends. Also, this company was recently added to the S&P 500, which also validates the strength behind this particular dividend machine. So I like this company today. 4.8% is a pretty good yield considering the safety that we've seen and the rising dividends that we've witnessed over the last 20 years of this stock.
For people who are looking at doing this, how much of your REIT portfolio do you let something like Realty Income, ticker symbol OB? I mean, where's the money coming from? Are you selling something else to buy it? You're just adding it to your portfolio, but how large a position are you willing to have in this kind of REIT?
Sure. Well, diversification is extremely important. And diversification is the cheapest margin of safety there is. So when I look at this company, I'm over a little bit above 5%. I like to have around 5% or less in exposure to one stock. So that means I like having around 20 REITs in my portfolio. I've overweighted this company because I've been able to buy on pullbacks like we're seeing right now. Again, I'm buying this for the stability and the predictability of the income. So it's what I call the anchor in my anchor and buoy durable income strategy. This is certainly an anchor. You're not going to see outsized performance, but you'll see year in and year out the predictability of this dividend, which obviously the total return will follow. Just real quickly, over the last 15 years, Realty Income's total return is over 1,000%, and you compare that to some of the other peers, it's around 500 to 600%. So this is a very predictable REIT that translates into very predictable returns.
And it's the intelligent REIT of the week. It is Realty Income, ticker symbol O, our first intelligent REIT of the week, the first of many from Brad Thomas, editor of the Forbes Real Estate Investor. He's on Twitter at Swan Investor. You can go to Forbes.com/newsletters/Forbes Real Estate Investor for more, or just go to iREITinvestor.com. Brad Thomas, I look forward to doing this with you every week.
Sounds good, Chuck. Thank you so much.
Hey, we are heading for home on the May 5th edition of Money Life. That means the Money Life Market Call is up next. Todd Rosenbluth from S&P Capital IQ when Money Life continues after this message.